G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please sure check out my links below, including exchanges I use and social media content that I post. All right, let's go. So we just got the US job numbers come out my time, 10:30 p.m. and very, very interesting results that we got from America here. So we'll start with the non-farm payrolls. We got 73. Okay. Previously 14. You're thinking, hang on, why was it 14,000? That's quite very low and just ridiculously understated. Okay. The consensus was 110. So obviously we missed on consensus and forecast, but previously 14,000. I want to click into this and show you. This is quite interesting. We get 14,000, okay. And the reason was, if you saw that before the jobs numbers come out for non-farm payrolls, the actually number before it said 14 was actually 147,000. So they lied to the public to say that we've added 147,000 when actually only just added 14,000. So big difference. And like a massive offshoot and revision down, which is not good. This is for June, okay? So last month's or a month before's figures. So very disappointing, okay? And you can see the trend here for non-farms. It's, it's all over the place, but to lie, to say the 147,000 only got 14,000. In May, 19,000. So that got downly revised as well, which is quite interesting. May got downly revised, and 73,000 for July numbers coming in 73,000. So them lying about June's numbers is quite interesting. So yeah, I thought that was quite the snarly, sneaky thing that the government did. But anyway, nevertheless, that's what come out, and that was that. So we got the unemployment rate as well. The consensus forecast was 4.2%, so an increase there, and 4.1 previously, and we come at 4.2. So we met that estimate there, which makes sense, okay, so giving the down revision of non-farm payrolls, all right? And then early this morning we got ISM numbers, PMI, and it come in lower than expected, okay? So 49.5, sorry, and previously 49, and we got 48, so less there. Okay. So the capacity letter again from Twitter, and they're talking about the down revisions, and we must received some massive downward job revisions, okay? May's job report was revised from 125,000 from 144 to 19,000. So this is the May numbers, what they were previously. Okay, so you can see there quite a big drop off. And June's was 133 from 147,000 to 14,000. So that's the difference between the two, yeah? So they added on 133,000 jobs, which just didn't exist. That's 258,000 jobs that just vanished from the data in 2 months. What is going on here? So, yeah, there's certain sneaky things going on behind the scenes there. I don't know who's coordinating it, whether it's Trump's team or it's someone in the Labor Statistics Department. I don't know. But apparently he fired that person just recently. So it just happened. He just fired them for giving such a poor number result. But it's not their fault. They're reporting on data they're told to report on. And either if it's true or false, it's questionable, yeah? It's been the government. It's pretty questionable. All right. All right, now just a chart here for Ethereum, and quadruple top is in. See the next bull market. This person thinks it's all over. All right, they've hit the top of the range here. Resistance level 1, 2, 3, 4. Now I'll show you in a chart when I get to the charts why this is not the case. All right, why we're repeating what gold did from 2020 to 2024, and you'll see, oh, interesting. They actually still break through, because more times you knock on a resistance level or even a support level, the more chances and more likeliness of you that price breaking through. Yeah, the price will break through inevitably. Okay, whether it's in a month's time, in 3 months' time, who knows? But it's coming. It's going to be explosive when it breaks through, all right? So I disagree with this guy. I don't think we're quite there at the top of the bull market just yet. I think indicators suggest otherwise, okay? So, yeah, this guy's just putting it out there that he thinks it's over, but he'll miss out on the gains. That's up to him. The old season that we all know and love, we're missing out on those explosive meme coin gains. They can transform, your wealth dramatically. So, anyway, that's up to him. Benjamin Cohen, good old Benjamin Cohen, and he says the daily RSI for Ethereum has now dropped from 88 to 53. So you can see, he did predict this to drop from this post here back in towards late July sort of thing, long ago. And yeah, touch, and get this resistance level, and we just rejected from that perfect rejection, and see prices dropping like a rock, So ETH's getting a correction, but it's sort of due for a correction because it had this massive, rise up for ETH. So you have your expansion, your consolidation, contraction sort of thing, and then expansion. What happens after expansion? Consolidation or contraction, yeah? This happens to price. Price needs to cool off. Right, back onto the charts now. Now we're on the weekly time frame, and we'll go to the daily real quick, the S&P, and you can see we did self quite a bit there, okay? So we gapped from 63.38 down to 62.38, and that's a drop of 1.6% on the day. So quite a big drop for the S&P, and yeah, that's a nice big gap left behind. But this big sell-off during the job numbers coming out absolutely poor, as expected, and yeah, it's about due for a correction. It's had a nice big uprise from the tariff saga back in early April to now we're in sort of early August. So we're 4 months now from this big rally here, and we're due for a correction, okay? So we have an expansion and a contraction or consolidation for the S&P. So, and I do see this coming back to this level here, okay, 56.69, which is this nice big gap here on the weekly time frame. So the weekly gap. So we have daily gaps and we've got weekly gaps. This massive gap here, I do see is coming down, filling it, consolidating for a bit until it makes its move either early 2026 or a bit earlier than that. All right, so got to keep our eyes out for this sort of stuff to happen. The S&P and sort of similar things for NASDAQ. It's got a gap down here, okay, at 20,000. Expect this to come back down. All right, just like the S&P. Cool off for a bit and then explode. So I don't think the bull market is over yet. All right, this is definitely not over. And I'll get to that why it isn't, especially for crypto specifically, that I'm looking at closely. The stock market is still going up quite strongly. Even after Apple and Microsoft reported earnings recently too, and that came up really, really good, bet estimates. So it shows if earnings are good in companies, like especially the top companies in America, and then there's no reason why we should see any big downside and recession or whatever else, common sense there. And the Russell, nice big correction. We had 2% down day on the Russell, and we're at this sort of support level here. Whether we hold it or we break down a bit more, don't know, but really I just see it's coming in a little bit lower to make a higher low for this one. Look, if you've got to sort of draw an estimate where it's sort of going to go, we're at the 0.236 level at the moment. We just touched it and wicked off it. And look, I do see this coming down probably to the 0.5 level, to be quite honest. And that'll match up with sort of support level here. So you can see the support level. You can draw it across if you want to, which is this high here, and even goes even further. Well, there's 1, 2, 3. 1 back in 2022, 2, 2023, and in 2023. And then we sort of struggled here in 2024. And then, sort of retested it, broke up, and we sort of came down to it here in March this year. And we wicked off it again in May. So I do see it's coming back down to here. It's quite obvious support level for the Russell, and it coincides with the 0.5 fib. So this is happening for the small cap stocks in America. All right, and yeah, that's that. So we'll go to the Bitcoin now, and we had a nice sell-off today. Well, today, basically from yesterday, past 10 o'clock now, but if you go back to the daily and the previous day's candle, from 116 down to 112,600. So quite interesting there. We got a 3% down day on Bitcoin. Right, so quite a nice sell-off for Bitcoin. Not a huge sell-off. We've had bigger sell-offs than that, but nevertheless, it's a sell-off, okay? And we're sort of getting a little bit of a bounce here, which is expected after two big purple candles in a row. Whether we follow this downside, I don't know exactly that's going to play out or not. All right, so back to the weekly now. And yeah, look, we're still pretty healthy up the top here. Nothing to stress out and worry about too soon. Interesting things, the MA ribbon, okay, is climbing. All right, we're at 90,600. So the 90K level, the sort of support level just here, basically, in around these levels. There's a couple of wicks there, 1, 2, and sort of one just below it. I don't see us going back down to here. I think it's over for this cycle until the bear market happens. But I do see this 100K level holding, all right? So we touched here, sort of in between it here, sort of here, there, sort of roughly, but it's a psychological level, 100K. Yeah, so I do see us coming back down to here, exploding, all right? Just like I said with the stock market, getting a correction, I do see Bitcoin also following that because it's being a high-risk asset. You expect that from Bitcoin, you know what I mean? So it is a no-brainer that we get a correction for Bitcoin. And somewhere, when this MA keeps climbing, we could sort of reach this MA eventually, whether that's in September, I don't know, and then we sort of explode into the end of the year. Anything's possible. I do see it's coming back to retest this MA. This MA, which is a 50-week MA, is very crucial that we hold. Yeah, holds it there, holds it here, 2024. Back in 2023, we held it. I've got a logarithmic chart, so it's easy to see. So this is basically, once we got out of this, we broke through here. So we broke through this level here in March 2023. That was it, all up. It's bull market territory. When we're below the MA, it's bear market. So see, as soon as we broke down durably here, all right, in January of 2022, we sort of couldn't get above it. Yeah, and we just stayed down below it. That was bear market. The bull market here, 2021, we touched it here early in that, sort of mid that year, and then came back to it in October, September timeframe, and then continued up. All right, and we had this pandemic crash. All right, so if you exclude that, we did sort of hover in and around it here in 2019, and it would have continued up to the upside and probably continued this run up if this pandemic didn't happen. All right, so as soon as we got above it, we continued higher. And you go back in history, bear market here from 2018, we're below it. We touched it, went down. As soon as we broke, yeah? So I mentioned this before in other videos. The bull market's on until this 50-week moving average breaks down. So we're above it, bull market, below it, bear market. All right. So quite simple there. All right, so that's Bitcoin there, and I just want to bring up the risk metric now and get rid of this MA, and yeah, so that's also MA. I'll bring up the risk levels. All right, so we're now sitting at a risk level of 68 at the moment, and yeah, which is fair enough because we're seeing a sell-off here. The top was around 73 in the risk metric, and the interesting thing I've mentioned on my Twitter post is, and on YouTube, the last YouTube video as well, that we're getting 1, 2, 3. We're getting divergence happening to lower peaks, okay, on the risk metric, and then it just coincides with higher peaks in price, yeah. So here, all going higher, as you can see there, and these are going lower, which shows that momentum is slowing down. All right, we should get a correction soon for those indicators playing out. And when you get to these at higher levels, 70, you've got to be cautious, all right? You can get very toppy. All right, so you can see sort of toppy here as we got to the real high 70s risk level. You go back even further, sort of 80 level here in early 2024. We got toppy and we went down. We didn't quite get to the 70s here, okay? We never got a correction nevertheless. here, the 70s, right? And we got the top, and then went down from there. Obviously, massive drop. This climbed a bit higher, got to the 90 level, all right? So sometimes it does, sometimes it doesn't. You got here in 2019, you got to 80, okay, and it went down. Here we had some little corrections along the way. From the 70s here, 80s, got a correction. Again, correction, and then we got again here, little correction, and then got to the 90, peak, and then obviously down from there. And then, throughout history, there are like smaller peaks, of course. It's not always get to 70 and it drops. There's like ones that go to, 60, not quite 70 there, and it corrects, even back here, got to 60 and corrects, yeah. So that's sort of the idea. But get a bit overheated on the risk metric, and the cooling off period was much needed, okay. Get a nice correction and then continue higher. So that is that for Bitcoin. I'll go to ETH real quick. And ETH's getting a big correction from its resistance level. All right, so up here. So resistance level here for Ethereum. And we get a nice rejection there. And I do see this coming back to probably 2,800 is what I'm looking at. So it looks obvious from the perspective of support here, resistance and resistance, okay, and then a simple retest. And then sometime early in 2026 or late 2025, we get an explosive move and get a breakout above this level. And there's a reason why, okay, that I'm talking about this. Is if I go to gold, for example, okay, I want to grab a bar pattern of gold from this period here. We had these sort of peaks, and it felt like it was over for gold, but it definitely tricked a lot of people, and which is fair enough, yeah. So if I take a bar pattern, where's the bar pattern? I love this. See, I don't do this very often. And just go from here to here-ish. Hello. So I'll copy this. I can delete it now. And then go back to Ethereum. And I'll copy this on this chart, and I can squeeze it a little bit, sort of fit the data, right? And sort of match it up with what Ethereum did. And sort of squeeze it a little bit, right? It's a bit hand wavy, but you get the idea. You can go a bit lower if you want. It doesn't really matter exactly where the correction was. Okay, so that sort of matches up good enough, So you get a peak. So gold shoots up. So does Ethereum, all right? Got a peak here, and it sort of consolidates, another high for gold, and then it drops. Gold drops. Ethereum didn't really drop until here. So it really drops, and they both lined up here. Gold back up to resistance level. So if I draw this resistance level out again, like this sort of thing, it came up. So did Ethereum. It dropped. They both dropped, made a lower low, okay, than this one. It went higher. They both had a little higher, and then a correction. They both went up to here. And you can see that it rejects from this resistance level. And then Ethereum hasn't done it yet, but what gold did was it gold corrected, okay? So now I'm sort of, roughly 2,800. Could go a little bit lower, but gold corrected back to this low here. So Ethereum could come back down to 2,100, theoretically, if it was going to follow this low. So gold double bottomed. And then what gold did is it tried again, and then a little correction, and what happened to gold? You can see it just absolutely ripped through that resistance level. This is the reason why I don't think Ethereum is top for this cycle, okay? It's because this gold pattern. Gold struggled to get through for 4 years, okay? From 2020 to 2024, it struggled to get through this resistance level. Now, Ethereum's it's a lot shorter time frame. It got to, in March of 2024. So a little bit over a year now. And, it's not too far away that we see this breaking out the upside. So that's an interesting pattern I see for Ethereum. And what else to talk about? A bit of dominance. What's going on with dominance? There's not a lot. We're just seeing a nice bounce now. Rejection here from this sort of support level. Going to draw out support resistance on dominance. There it is there. Resistance, support, and shoot up. There we go. I do see this going higher. Okay, higher and higher and higher. And 70% is my target to match up with the highs here. So back to 2019, 2020, 2021, and then even back to 2017. Okay, so it does go back all the way back there. All right, so we match this line up, and it lines up perfectly here to reach these targets that I'm seeing for Bitcoin dominance, to take away some market share from the rest of the altcoin market, crypto market. Where else is altcoin but Bitcoin, of course. Yeah, that's pretty simple to see. And you see, so grab a Fibonacci tracement from the top to the very weak bottom. Projected from the 66% dominance, which is the 786 level, as you can see here. And we had a correction back to the next level, the fib level, which is at 0.618, okay, as you can see there. And we're rejecting from it, right? So fib to fib. And it's pretty simple that we'll see more upside there for Bitcoin dominance. And yeah. And 70% is my target for that one. All right, so nothing to see there. Much more than that, okay. So it's similar sort of idea. The highs here made from 2019, 2020, and 74%. Okay, so touch, and bam, up to here for Bitcoin and its stablecoin dominance. And we've got Bitcoin dominance and ETH dominance. Now, getting up to 85% is going to be interesting to see if that does that. That's quite a big jump, okay. But we did see this back in 2017, right? So mid-year to November, the end of that year, and then back in 2020, 2021. So seeing it up to 85 could be a little bit of a stretch. Like it's nothing's impossible, but a conservative target, if we want to put a conservative target on there, would be probably 80%, yeah? As long as this high here matches up, and we get a lower high, and then continue to fall off this cliff, all right? So it's Bitcoin and ETH dominance. Now we'll just skip along now, and this is the inverse of Bitcoin dominance, and it's basically all the altcoins minus ETH and Bitcoin against Bitcoin, all right? And USDT is not in this equation either. So yeah, I just see this going back down to 0.25, which is basically the range low. Quite obvious here, and 2017. Okay, 2020, 19, and 2021. And then to cut back in this box. Whenever that plays out, we don't know exactly, but sometime towards the end of the year, going to 2026, and then you should see explosive move to the upside, back to the range highs like we did every other bull run cycle. That'll mark your top there for your altcoin season. Right, okay, because you want to see this explosive move to show that when you get up to here, it's heated, elevated, and that is it. It's time to de-risk, all right? We haven't seen that yet. We haven't seen the range lows yet, so you want to see a bit more suffering, unfortunately, before we see the pain play off to a massive gain. Yeah. And then, look, that is really it in terms of dominance goes. I'm looking at a bit. I've just added this chart here, Sui Bitcoin. Basically, Sui is one of the nice L1s that are sort of rising up now. It's a new one. And yeah, if you know what Sui is, good for you. It's fantastic. I'm just chasing basically its valuation. It's Bitcoin, particularly for a meme coin that I'm looking investing in. So it's on the Sui blockchain, and I think it's got some legs to run. But we need to sort of see this chart durably bottom in this box before an explosive move higher. Okay, this happens before that. Don't know where it's going to top. Could really break this high. I reckon definitely it's going to break this high and go higher. All right, and form its own new high against Bitcoin. So really, that is it, guys. Yeah, and the bond market did sort of sell off. The 10-year yield did sort of come off a big drop. 4% drop is huge in the 10-year yield. And we're sort of consolidating now, seeing which way it wants to break down. We do have a support level at 4.15%. We'll see what happens there. Which one takes over? Is it the job market or the inflation numbers? Really becomes a big issue for the Fed. Whether they're going to cut rates or not, because they left rates the same. going in September meeting, which is another couple of months away. See what they do with rates, because they really determine the direction. And the bond market might give a hint to see what they will do. If they do cut rates, it could lead to downside of the yield, but could also lead to upside, depending on the economy. The economy is acting, and jobs and inflation numbers. Okay, so it's very crucial you keep track of that. At the moment, it's about 50-50 odds on whether they will cut rates or not the next meeting. Because August is a month off where they go to Jackson Hole and have a speech and all that sort of stuff. But September is the really big one to look out for. All right. So the yields, it can sort of give you an idea of the health of the economy, and that is that. All right. Thank you. So I hope you enjoyed this video. Just another weekly update, seeing what's going on, and talking about the job numbers in America, seeing they're quite grim and quite bad in terms of misses and revisions down from May and June numbers, especially seeing that they've been revised ridiculously lower, which is a big lie from what they reported to finally revealing the truth, what the numbers really were, okay, and seeing July numbers coming at 73,000, so it's a bit better than June and May, but yeah, still bad, missing estimates of 110,000. So the unemployment rate jump up to 4.2% from 4.1. What else? So yeah, that's pretty much it for the economic data. And yeah, looking at charts, looking at ETH and following gold, seeing that I don't think the bull market's over yet. And Bitcoin's price, definitely seeing Bitcoin and the S&P and the NASDAQ and the Russell, all the stock market indices, seeing them all come to a correction. It's coming soon, I think. We're going to get a cool-off period, especially with the tariff uncertainty coming out and the economic data being uncertain. It's basically Trump versus Powell at the moment. So who gets their way in the end? Being the Fed is the independent organisation, private organisation that's not connected to the government. Powell can't give in to what Trump wants because he just wants political points. In the day, he doesn't care about anybody else. He wants low interest rates through his real estate, investments to do better. As it's a bit up in the air at the moment. We did also see copper fell 20% in a day. All right, that was the other day. It was pretty bad. Okay, 20% drop in a day. So yeah, there must have been a tariff announcement on copper. So that's why I did that. All right, so a big fall in copper is very, very, very interesting just to look at, because copper can give you an idea of the health of an economy. Because copper is really needed to build a lot of infrastructure, housing and whatnot. And to see that tariff that, it's not good. Tariffs just don't work, okay? They're a tax on the consumer, right? And because businesses will pass on that cost that they have to eat up onto the consumer. So really these tariff wars, other countries, they're not good for America. They're not good for the growth of the economy. What Trump's saying is absolutely false. You've got to study it yourself to find out what really goes on, because he won't never reveal that it's a tax on you as a consumer in America, and vice versa in other countries that counter tariff America. So they're going to have to pass on their consumers as well. So the whole world gets affected by it. It's not good for the whole world. And free trade is the way to go, all right? So anyway, rambling on. All right. So if you enjoyed this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you in the next one. Cheers.